Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. A continuation of the definitive action we have seen over the last 2 weeks. Okay, so a couple of weeks ago I drew a second flatter but also lopsided and larger January to mid-June diamond pattern. Is the one I have highlighted in bright red on my daily chart, as compared to the original February to late May diamond pattern. Over the last 2 weeks, prices have taken off on the downside, punching down through some pretty good supports, ones you would already know from back in March. We have punched down through and closed below the following: the 2016 high at 179.55, the influential neckline currently 175.95 of the January 2020 to April 2021 reverse head and shoulders bottom, and the congestion, quite a lot of congestion in fact, between 174 to 174.5, containing the August 2021 low at 174.5 and the 50% Fibonacci on the May 2019 to February 2022 move at 174. These are now resistances. Prices then went down through a fairly free area all the way down to the 2017 high at 159.30, where we are now hesitating. Last week I laid out some potential targets below for the lopsided diamond pattern. A primary target X for such a pattern would be in the 156.35 zone, with a secondary target X1, harder secondary target X1, in the 141.80 zone. Okay, so there's one further ingredient to throw into the mix. As of 3 Thursdays ago, we had a bow tie formation of the medium moving average, currently 181.20, and the short and long moving averages, currently 173.5 and 178.65 respectively. They originally seemed to be in no order, nor indicate any direction, but they did cross over and have since started heading lower. So it's worth paying attention to them, especially as we might see a resultant move from this pattern as quickly as between the 6th and the 13th of July. London coffee. A major incident in this market late last week, and one that takes it off my most favourite chart list. We saw the market punch down through the lower time, currently 26.07, with 2 consecutive closes below it as well, of the major January to March bullish Andrews pitchfork, highlighted in dark blue on my daily chart. This bullish pitchfork has been running the market high in, to be honest, a perfect pattern since roughly mid-March. Prices have also closed below the March 2011 high at 26.72, the June 2011 high at 26.41, and perhaps most importantly below the rising short medium moving average, currently at 25.49. Below we have support at 25.18, 24.68, 24.11 and 23.95 before we see the rising medium moving average, currently at 25.49. There is a chance that this pitchfork may repair itself, but it seems right now unlikely, and the longer it delays any repair, the harder it would be to make it happen. Hence I start to look to see what alternative patterns could show themselves with such a rapid move lower. I've come upon a potential and possible pattern. A possible bump and run reversal top. This fits in with the concentrated action around the old middle time, currently at 27.77, and a subsequent fall. Okay, so in this instance for such a pattern, I am going to finesse some of the points related to the build up to the bump. Instead of utilizing a lower trend line for the rising action, I'm going to use the lower time. I know it's a bit radical, but I think it might be the most appropriate way to pay credence to the bullish Andrews pitchfork, yet at the same time acknowledge the situation as it may now stand. Thus I would look for an initial target X in the vicinity of the April highs and May lows around the congestion at 24.11 and the lesser Fibonacci line at 23.95. This could also tie in with the rising medium moving average that is just below. I would then suggest a secondary, harder, much harder to reach potential target X1 in the area around the highs of late February and early March at about the lesser Fibonacci line at 22.03. I fully expect to make some further, potentially drastic, finessing of these in the coming weeks. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.